The UK's vote to leave the EU has shocked equity markets and caused the British pound to plunge. The Bank of England has hinted that it may ease interest rates, even though they're already at record lows. But the bank's governor, Mark Carney, has warned that whatever he does, it may not be enough to contain the economic fallout in the United Kingdom and the rest of the world.
As a result of increased uncertainty and tighter financial conditions, UK households could defer consumption and firms delay investment. This all lowers labor demand and causes unemployment to rise. Through financial market and confidence channels, there are also risks of adverse spillovers to the global economy. And one uncomfortable truth is that there are limits to what the Bank of England can do.
Well, with all this uncertainty around, it's no surprise that investors are looking for safe havens for their money. Gold is often seen as one of the most popular alternatives, and the impact of Brexit is pushing up prices. Melanie Ralph reports from Singapore.
Commodities trading is coming to the streets. People flocking to dealers in a bid to benefit from Britain's Brexit. Bartering for the best price for their jewellery, people are hoping to cash in on the yellow metal's jump in price. Gold has surged by nearly 5%, hitting a 2-year peak following Britain's decision to part with the EU. And prices are expected to continue shining.
I think the financial market volatility that we've seen as a result of the Brexit vote is likely to linger for a while. Even though we have had some subsiding of market volatility, I think this is only temporary. The uncertainty will continue to linger, and as a result, I think investors will continue to look for safe haven alternatives to invest their money. This is where commodities such as gold has become very, very attractive.
On the flip side, the Brexit vote has sent global assets plummeting. Oil slid almost 8% last week, the biggest drop in nearly 5 months. But there are other factors at play dictating where that black gold heads from here.
With the Fed almost certain not to raise rates this year, the dollar should remain weak, and that is positive for oil because, like all other commodities, it's priced in dollars. So if the dollar is low, people who around the world who have other currencies can afford to buy more oil.
Whether it be the black or yellow gold, there's certainly opportunities for investors post-Brexit. But it's not just the experienced investors that could cash in right now. For those looking to sell their gold, now could be the best time to get the biggest returns. Melanie Ralph, TRT World, Singapore.